Social media still dominates regardless of what the stock market may look like. And that is why we believe Meta could still make a strong comeback in 2023. In our video today, we give you some of the reasons to expect Meta's rise this year and forecasts to watch out for. Meta, which is the umbrella term for social media platforms Facebook, Instagram, and WhatsApp, and is the largest social media company. Last year, analysts did not hold great expectations for Meta stock as it continued to perform poorly over each quarter.
So what do we want to do about Meta, which is leading the S&P today? As we said, Disney is a big decliner for the Dow with the announcement of 13%. The first layoffs, by the way, in that company's history. Brad Gerstner, of course, wrote the letter urging them to tighten their belt to become leaner and more fit.
This was largely due to fierce competition from rival companies, as well as a sharp decline in online advertisements. Wall Street is, however, expressing bullish sentiments because Mark Zuckerberg seems to have incredible plans for the social media company moving forward. One of the reasons Meta has the potential to bounce back is the company's $40 billion stock buyback plan. In stock buybacks, as generally known, corporations buy back their own shares from existing shareholders to limit available shares in the open market, thereby creating a bigger demand for shares. The company is also looking to cut costs by trimming its labor force, specifically reducing layers of management, as said by Meta's chief. Wall Street analysts are impressed with the moves the tech company is making, and as rightly pointed out by Sarah Anderson, director of the Global Economy Project at the Institute for Policy Studies, Wall Street loves layoffs. The metaverse has been an interesting space for Meta, and in a little while, we'll show you how this will change Meta's outlook in the year. More analysts have shared their expectations for the company this year. Credit Suisse analyst Stephen Ju wrote in a note to clients, "We are looking at a scenario in which Meta will have more or less ramped ad products to replace the lost revenue following Apple's privacy moves previously pegged at $10 billion. It certainly does not seem like Meta's recovery will be smooth sailing. Still, with certain technological advancements and changes being made by the company, Ju expects to see a gradual improvement in Meta's revenue and growth." He raised his price target from 145 to 180, maintaining an outperform rating for the stock. Monness Crespi Hart's Brian White doesn't share the same sentiment, indicating, "In the long run, we believe Meta will benefit from the secular digital ad trend and innovate in the metaverse. However, regulatory scrutiny persists, internal headwinds remain, and we believe the darkest days of this downturn are ahead of us." That is a pretty gloomy prediction. For now, however, Meta's revenue is forecasted to grow 12% by 2024, and analysts are maintaining a buy rating for its stock. Are there indeed hard days ahead, or is Meta set to forge through these headwinds? Let us know your thoughts in the comment section below. Let's talk about Meta and the metaverse. Mark Zuckerberg describes the metaverse as the ever-increasing digital world in which we all operate. Through its use of artificial intelligence, users are able to access the virtual world, explore and interact with others through avatars and even physical activities like swimming. Facebook's metaverse is accessible to users all over the world, allowing them to explore and interact with one another. In this ever-changing virtual world, new business opportunities are constantly being created. The metaverse consists of several interconnected virtual worlds that are accessible through web browsers and mobile applications. From advertisements to subscription fees and in-app purchases, there are several ways to monetize the platform. Meta's investments in the metaverse are set to boost earnings due to the continual use and exploration by users. The digital world is yet to witness its fullest capacity, and while that happens, tech companies like Meta, who have been on the lookout, are likely to benefit in the long run. Investors are betting big on Meta this year, and for a very good reason, which we will explore in detail shortly. After a tough legal battle between Meta and the Federal Trade Commission, the tech company can acquire virtual reality startup Within Unlimited. The FTC argued that the deal would be anti-competitive, but after a rather heated legal discourse, Judge Edward Davila ruled in favor of Meta's acquisition. Meta's road to diversifying and expanding its revenue sources is increasing, and soon we should expect the company to monetize these new revenue streams. Share prices could bolster after these new additions, so be sure to subscribe to this channel. Let's bring you all the updates. The digital world is yet to witness its fullest capacity, and while that happens, tech companies like Meta, who have been on the lookout, are likely to benefit in the long run. Investors are betting big on Meta this year, and for a very good reason, which we will explore in detail shortly. After a tough legal battle between Meta and the Federal Trade Commission, the tech company can acquire virtual reality startup Within Unlimited. The FTC argued that the deal would be anti-competitive, but after a rather heated legal discourse, Judge Edward Davila ruled in favor of Meta's acquisition. Meta's road to diversifying and expanding its revenue sources is increasing, and soon we should expect the company to monetize these new revenue streams. Share prices could bolster after these new additions, so be sure to subscribe to this channel. Let's bring you all the updates. If there is anything investors are betting heavily on, it is the company's ability to bounce back after a hard hit. Despite the ongoing challenges, Meta is one stock capable enough to forge ahead. As Zuckerberg stated, "We closed last year with some difficult layoffs and restructuring of some teams. When we did this, I said clearly that this was the beginning of our focus on efficiency and not the end." The company is determined to bounce back and could indeed recover in 2023 if, as Mark Zuckerberg said, more emphasis is placed on efficiency. Meta Platforms have the potential to recover. For more specific details on how this will happen, check out our video titled "Can Meta Stock Rise Above $150 for More?" Thanks for watching through to the end. We'll see you in the next video.